Okay, our first set of top stock picks for the new year. Kevin Cook, we start with you.
Myriad Genetics. I just wanted to take a look at biotechs. I looked for Zach's number one ranks. I could have gone with Amgen or a much smaller company. I'm going with a mid-cap, 2.2 billion market cap, and as their name implies, their business is discovering the genome, right? Find the genes, find the associated proteins, and then can they create new drugs, new therapies, sometimes called, they also create processes, molecular diagnostics. Anyway, the stock, I think the past 10 quarters, an earnings beat averaging almost 9%. No wonder it's Zach's number one rank. And estimates, all 13 analysts bumped estimates after their November report. But the stock has pulled back here since then, back to 27. I just think it's a good buying opportunity in a strong trend. If you want to own, a stable, profitable, mid-cap biotech trading 17 times, MYGN.
Okay, Todd, you've got a Realty Trust here, right?
Yeah, Digital Realty Trust is the stock. DLR is the ticker symbol. They're a technology REIT, real estate investment trust. I love those. I'll get to why in a second. But they focus on data centers. They own over 100 data centers across the globe in over 30 markets. Very rapidly growing company. They're opening new data centers. They just opened one in London, one in Denver. Good growth story, I would say. Just came off a solid earnings beat back in November. They saw strong increases in rental revenue. They saw expanding profit margins and a huge increase in funds from operation. Based on consensus estimates, analysts expect solid high single-digit, low double-digit funds from operation growth over the next several years. So you've got a good growth story here, but as a REIT, they have to pay out at least 90% of their earnings to shareholders to avoid paying tax on that money. So a good solid 4.2% dividend yield here. They've increased that at a 21% compound annual rate going back to 2007. So good growth, good income, and at a very good price. They trade at just 14 times forward earnings. Historically, they trade at 15 times, so there could be some capital appreciation to go along with that solid yield.
Eric, we know we can always count on you for a fun pick.
Exactly, and to start 2013, I'm looking internationally to Japan with Wisdom Tree's DXJ. It's the Japan Hedged Equity ETF, and this one's interesting. It takes out the currency exposure, so you don't have to worry about the fluctuations in the yen against the dollar. And that's really important to start this year because the new Prime Minister of Japan, he has basically told the central bank, hey, we need more inflation in Japan. And that'd be pretty incredible if Obama told Bernanke here to do the same thing. But I guess they're not as concerned about that over in Japan. So I'm looking for a weaker yen to start the year. But we could see the exporters do really well. So that could make some of the big Japanese stocks great picks, especially if you hedge out the currency exposure with this ETF.
And that's why that ETF has taken off with the Japanese stock market, too.
Exactly, yeah. It's done pretty well over the past month, and I think if we can continue to see the yen weaken and some of the exporters pick up because of the better exchange rate, could be another solid pick to start 2013.
It just hedges currency risk, not equity. It's not a long-short ETF.
Right, it's just the currency risk. That's a good point.
Yeah.
Okay, thank you all for that. And we want to take this opportunity to wish everyone a happy new year and a prosperous new year as well. From everyone here, I'm Terry Ruffalo.